Alright guys, so yesterday the triangle was broken, it played out very well, and it seems like that the chances for the deeper correction are getting smaller and smaller. Right now it's really hard to set any targets for the following growth except like the major targets which we discussed yesterday, $17,000, $20,000, and I really don't think that it's reasonable to try to catch like 2, 4, 5% of the move. And it's more reasonable to follow the major swings of the price. So right now, as you see, the price did have a pullback from this major trend line, which was support in the previous cycles. And right now it has a function of the resistance. In fact, the price did go above that second time. I'm sure though that it will be broken relatively soon. And today though, I would like to talk about a bit different thing, namely about some interesting scenarios of the price evolution based on the analogies and some technical analysis. And I would start with gold, as we already addressed this similarity before. So you see, of course, timescale is very different. In 1979 there was the top of the price of gold, and then we had a correction very similar to the one which we saw with Bitcoin, with finally after some consolidation there was a drop and capitulation, a very short period of accumulation at this area, and after that there was the growth almost without the pullbacks. And at some point, somewhere at the middle between the previous high and the low, there was a first major correction, which was followed by one more strong growth with even a bigger correction after that. And then there was a new all-time high with the next cycle. So as you can see, it's very similar to what we witnessed with Bitcoin. This was the first strong correction, and then potentially the next one will happen somewhat close to the previous all-time high, and maybe it will have the drop much deeper than even we had this time. And there are many reasons to believe that those two assets may act in a similar manner despite of the different time frames, capitalization, etc. Here's another interesting thought from Jacob Canfield, and he was basically proposing the fact that we are going up in a kind of a parabolic curve, and we have some bases for the accumulation periods during this growth, and we have like 1, 2, 3, and maybe base number 4. And he was pretty much right, except the fact that this base 4 appeared to be a little bit before then $16,000, somewhere around $12,000, $11,000 right now. So maybe we'll have more than 4 bases, maybe we'll have one more before we'll reach the final point. And it's very similar to what we discussed before, with the only one difference that his sell point is $30,000 with a big correction after that. In my case, I expect it a little bit earlier, before the previous all-time high. But the time scale is very, very impressive. With the parabolic curve evolution, everything goes really, really fast, and this thing we may see even during this month already. It should be also mentioned that he doesn't say that this is the maximum point for Bitcoin before the next bear market. Is just some preliminary top when we have the biggest correction during this rise. So what will be the new all-time high? It's actually almost impossible to predict, but there's one tweet interesting from Gravity Wave on Twitter, and he's pointing out that if you'll use the logarithmic setup for your Fibonacci retracement levels, you will have that during the whole cycles, the next all-time high was at 2.382 level based on the previous high and low. It worked almost perfectly for every cycle, and according to this pattern, you would have the next all-time high somewhere around $250,000. And this number, of course, is much more pleasant for every one of us, but surely it's really hard to believe and hard to imagine that it will happen anytime soon. Now finally, one more idea and the way how you could estimate the market condition, considering the fact that it's oversold or overbought, or we are close to the new all-time high, etc. CryptoCare tweeted this chart, and basically he refers to the indicator called Meyer multiple. Basically, Meyer multiple is the Bitcoin price divided by 200 days moving average. This is how it looks like, and he's pointing out some critical levels, for example 2.5 level, which was the top for several peaks, 1, 2, 3 peaks in previous cycles. And in fact, right now we are not at this point, so we have actually the room to grow even for the next local high, which would be followed by the significant correction, which again we were talking about this several times. But moreover, it actually could go even here, and technically there is nothing impossible in that. There is only one thing that from the conservative standpoint, the bigger the capitalization of crypto Bitcoin, the harder is to move it to the new all-time high. So the delta between the next all-time high and the previous all-time high should be less than the delta in the previous cycle. Therefore, we can't expect something really crazy, but maybe maximum like $90,000 or even $70,000. Somebody says $50,000 or $30,000 for the next top. But there are really factors that could eliminate all that theory, and with the FOMO, when everybody will talk about Bitcoin and crypto, when even some institutions or a lot of the institutions will try to invest in cryptocurrencies, there is no wonder that there is a chance we'll go much higher than those conservative estimations. Finally, as you remember, yesterday we were looking at these ascending channels on the logarithmic timescale and how the price does react with those channels, maybe build some analogy from the history of the previous rally, and this is how it may actually play out. Of course, this is just a guideline and it may evolve in a completely different way, but in principle, if something similar to the previous cycle will happen, then we'll continue to bounce off between those channels tops and bottoms, and the next all-time high will be somewhere around $100,000, a little bit below that, but of course it will depend on the speed of this process, so we may actually not see it in 19th year, but maybe in 2020 or even later. But an important point here is that if you look at this area from $6,000 to $3,000 when we had this drop, in fact, this may be treated as an extremely oversold territory. In this way, the fact that we went above $6,000, we actually had this whole rally from $4,000 to like $12,000 in such short period of time, may simply mean that this was just a reasonable escape from this oversold area, and from now on, somewhere around this zone, we may have a very similar process to this accumulation and relatively slow rise, and instead of this channel, we may continue it in the next channel, which would be much slower with a lot of corrections on the way. But on the other hand, it may lead to the even stronger rally eventually. After this accumulation will make a base, a foundation for this rally. And to be honest with you, I would actually prefer this to happen instead of continuation of this crazy rise, because of course it's really hard to spot the top, but the fall from this top will be very fast and very painful. So instead of that, I would actually prefer to see something like this. Anyway, I just wanted to share with you some ideas, some thoughts, so you would be prepared, you would understand this market more, and you have some alternative projections on the price evolution in your mind. So when one of those scenarios will play out, you will be ready and manage your investments accordingly. Alright, that is it for today. I hope it is useful. Thank you for watching.